The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Well, not hard for guessing what our stock of the day is. It is, of course, Nvidia. Goodness, wasn't this result highly anticipated? It has forecast fourth quarter revenue above Wall Street estimates. In a make-or-break result essentially seen for the AI boom. It reported record revenue for the third quarter of $57 billion US, up 62% from a year ago. Net income up 65% from a year ago, nearly $32 billion. It is the world's most valuable company and expecting fiscal fourth quarter sales of $65 billion US versus analyst estimates of around 61.5. And the chip maker is betting on booming demand for its AI chips from cloud providers against the backdrop of widespread concerns about an AI bubble. Jensen Huang saying Blackwell sales are off the charts and Nvidia plans to grow our presence in the US over the next 4 years. He also talked up recent deals with Anthropic and ongoing partnerships with XAI, OpenAI, and other tech companies as well. And saying what he described as a misunderstood hyperscale as a category of AI companies, including Meta, Microsoft, and Amazon. All right, let's get into it. Mark Gardner.
Yeah, it was an outstanding result, and there would be a lot of highly leveraged investors wiping their sweat off their brow this morning in relief. And look, it was belted into I think it's flat for the week after rallying nearly 10% this morning, over the session today. And I don't really understand why it was hit into the result, because one thing Nvidia has done extraordinarily well for the last 3 years is report well. Jensen's always great at pushing the future prospects, but as you can see there, though, it's not immune to an occasional dip, because the market does get carried away with it. It's an incredible company. I couldn't buy it here at the moment, despite the fact that I don't think you'll go too far wrong buying it here at the moment, to be honest. But I'll go back to something that Mark Moreland said earlier in the day. I think there's now other opportunities in this next phase of AI where I can't see Nvidia doing the kind of returns that it did for the next 5 years, but there's a bunch of other really. So if you've owned Nvidia and you've taken the ride, I'd definitely be trimming here and maybe exploring other options, for instance, like Duolingo or AppLovin or whatever, because we saw this with the internet. The internet boom was basically the hardware guys and were the early winners, and then the likes of Meta and these guys didn't come along until the tech bubble had burst, and 2 years later. And the incumbents like Microsoft survived very well, etc. But I think it's probably about fairly priced, I suppose, and I don't think you'll go too far wrong with it. I don't, and if we get a situation where I think once Trump ends up, stacking the Fed, he'll find an excuse to get interest rates down again and flush the system with money, and then this will be the thing that skyrockets probably at a better pace than anything really. I don't see anything going wrong with the company, but I'm sort of starting to get the feeling it's playing out for these incumbents, and the investors' expectation that they're going to get the same result they've got in the last 3 years is probably a little bit overcooked, and there's the likes of ServiceNow, Salesforce, AppLovin, Duolingo, like the software companies are starting to monetize at their end, and that'd be where I'd sort of be looking for those next big winners. But look, you cannot fault it. And the Blackwell chip thing, they've all got these inference chips now, but they're still buying Blackwell. It doesn't really matter. I was really concerned that these specific chips for specific jobs was going to start to eat into it, but basically, I don't think it even reduced the backlog of orders, to be honest. So and the restriction is power, basically, and deploying this stuff. So, all right, I'm going to say it's a hold at this point, but
potentially a trim.
Potentially a trim just for other opportunities in the same space. But you're definitely buying this on dip. If the market has a freak out and this goes anywhere below $140, you are buying the hell out of it.
Michael.
Well, it's my biggest position. So I agree with what Mark said. I think Nvidia will be 10 trillion within probably 3 years. I think well before the end of the decade. You look at at the moment, their Like they've guided, and they've been very good with their guidance. They don't take a wild punt. They've given up plus or minus 2% variation of 65 billion for the next quarter, which is up from 51 billion quarter three, and they've got a 75% profit margin.
And 8 billion more than the analysts were expecting.
So they are the queen of data centers. The spend, and one of the things Jensen said is they're expecting the spend over the next 3 years to be up 3 to 4 trillion. So it's going to average. We're going to get to a trillion a year average, and Nvidia gets about 30% of the spend on total spend on data centers and so on. So that means they're going to be 300 billion a year at 70% margin. So there's no reason why it shouldn't get to 10 trillion. And the business is much more than just chips. They've got all the networking and the whole stack to be able to deliver AI factories where the ASIC suppliers can't really do that. You know, there's plenty of use cases for ASIC chips, and all the hyperscalers use them as well. But Nvidia, I see them having no problem maintaining this growth rate for the next 3 or 4 years. So it's hard to see why it wouldn't be 10 trillion by then. Having said that, that's still a good return.
Yep.
But otherwise, I agree with Mark. There's lots of others, because they don't have the law of large numbers acting against them, because it's already 5 trillion. I'm saying get to 10 trillion, but that's only doubling. Now, that's still good.
Yeah.
It's great. Whereas like AMD, for instance, which is much smaller with about 4% market share, is likely to quadruple over the same period because it's much smaller. And it's not going to be Nvidia.
It's not a better business.
But the growth, you've got to remember, the growth of the sector is 38% a year.
Yep.
So that's the overall growth is at 38% a year. Everybody's going to make money. So,
all right, so you own it?
Yes, and I've trimmed it a bit, but only because I want to put some money into things that I think are going to significantly outperform that, like Duolingo.
All right, so we'll call it a hold?
Oh, yeah.
Okay.
And I agree with it could be a buy for people right now, by the way, but there's no reason why you wouldn't. I'm just saying for me, I'm a hold.
If there's an AI bubble, it ain't going to be Nvidia that explodes the party.
But if we have some sort of significant market drop, Nvidia will come down.
All right.
And I agree. 7% of the index.
Yeah.
Well, let's call that a double hold, potentially a bit of a trim if you wanted to sort of diversify away from that. But no, we're calling it a double.
It's hard to say. I can't say it's a sell because it's not.
No. Let's be clear. It is a double hold for our stock of the day, Nvidia.
Okay, we can accept that.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.